Greetings, members, one and all of the Salivation Nation. I pulled out some of my dirty silver for this one. What the heck? Let's pour out some more. And let's explore. Indeed. Might as well pour it on thick. The gap between silver and gold is closing. Now, it's not a rapid close, but we are seeing a trend starting to form here possibly. And I've kind of covered this in some of my recent videos. As I record this video now, both gold and silver are down. And silver is taking a bigger hit than gold. But still, there's the gap between gold and silver is narrowing somewhat. I'm going to be referencing an article here from MarketWatch that talks about silver's performance compared to gold, and they surmise that this could be just the start of something bigger, and also how really this is happening without a silver squeeze movement in play. And we'll get into that in a moment. Silver has underperformed gold this year, but that could change soon. A real scarcity has been developing in the silver market, said Keith Weiner, founder and president of precious metals-based investment firm Monetary Metals. Actually had interviewed him on this channel not long ago. Scarcity will likely be resolved, as always, by higher prices. Even after coming down in the first few days, the 6-month lease rate for silver has been seen a significant rise over the last 2 years, said Weiner, with data from Monetary Metals showing lease rate offers recently around 3.6%. The scarcer something is, the more expensive it is to lease it, he says, and that's very true. Total global silver supplies are also forecast at 1.03 billion ounces this year, which is below total global demand expectations of 1.1 billion ounces, according to the Silver Institute, citing data from Metals Focus. Despite the tightness in supplies, silver prices have lost much more than gold so far this year. As of Wednesday, the most active silver futures was down almost 2%, and they declined 18.1% this year, while gold is down 8.6% according to Dow Jones market data. So far, though, this month, silver has managed to outperform gold, gaining nearly 7% from the end of August, while gold prices have declined 3.1%. Weiner said he would characterize the latest moves in silver as a short squeeze, that he would not characterize it as a short squeeze. Essentially, that's when sharp prices rise, forces traders who shorted the metal to buy it. In 2021, silver saw volatile moves in late January to early February following a post by a Reddit user who suggested executing a short squeeze on silver. Prices rose 3 sessions in a row, including a more than 9.3% jump on the 1st of February, but then saw a drop of over 10% the next day. It just really couldn't keep up with it. It's just much more of a complex market. And so even though it did work in the short term, it was very, very short-lived. Some analysts see silver as undervalued. In late August, the silver-to-gold ratio approached 100 to 1, according to Taylor McKenna, analyst at Copernic Global Investors, meaning that it would have taken 100 ounces of silver to buy 1 ounce of gold. That ratio has only been higher twice in the last 50 years, says McKenna. In both previous instances, silver drastically outperformed gold over the ensuing 12 months. So while Copernic expects gold to do very well in the future, partly due to the continued debasement of currencies by central banks worldwide, it would not be surprising to see silver again outperform until it reaches its long-term average ratio of 50 to 1 from the current ratio of roughly 90 to 1, he said. Now, to me, that's overly optimistic. And again, explaining this gold to silver ratio, and the reason why it's important is because it gives us some insight as to how silver is in relation to gold historically how it's been fixed over time. If that fixed ratio has been 15 to 1, and people think about that, as sort of what they think should be where it is again, and maybe they feel it should be fixed. But again, that's the market manipulation. The mining ratio between the two metals is about 8 or 9 to 1. But as you know, and I try to reiterate on this channel, that should never be a measure of where the price should be. Don't ever use that as a measure of where the price should be. And by the way, the gold to silver ratio is just a ratio as measured by the market prices for gold and silver. That does not reflect the physical gold to silver ratio that you could get whenever you buy, especially in terms of Silver Eagle premiums compared to Gold Eagle premiums, or any where they are at the time of buying the metals or at the time of selling the metals. You have to keep that in mind. A lot of people get confused by that, but most of the time you're not going to be able to trade based off of the ratio at your local coin shop or a bullion dealer. So in the instances, silver drastically outperformed gold over the ensuing 12 months in the past years, 50 years. He said, so while Copernic expects gold to do very well in the future, partially due to the controlled debasement of currencies, it would not be surprising to see this. But I doubt that's going to happen anytime soon. In fact, we may not ever see that again, just because of the way silver is viewed compared to gold. Even though it has been trading more lately as a precious metal, it's traded enough as an industrial metal, as a commodity, that it's damaged that normalcy, I believe. And so reaching that normalcy again is going to take quite some time, and maybe even a wholesale reiteration of the view, and maybe even a paradigm shift of the view of silver in the marketplace. Now, that's aside from us silver stackers out there who accumulate the metal as a precious metal. That's why we have sort of that separation, that further separation between premiums and spot price. And that's for a number of reasons. But again, that separation is most notable at the time of selling your silver. In other words, a Silver Eagle, you may get, $6, $7, $8 above spot for it from some local coin shops, others $5, $6 over spot. But a privately issued silver round, you may get much less for it, maybe $1 over spot. But that difference above spot from what you can get silver if you go to sell to a business or even to your fellow neighbor, that's the true price discovery. That is really what it is. For you, spot price doesn't matter at that point, although, again, understanding that regardless, it is a foundation. It plays a role in price discovery. There's no question about it. And price discovery is what gets you to value. It is where we get to value, because there's a difference between price and value, as most of you understand. So there's where we're at there. Volatility in the silver price has historically been more significant than gold, as we know. And again, today's prices, we can see that. And silver has suffered more than gold. The volatility is not necessarily a risk, but a buying opportunity. It can be seen as that. Adding that when silver was underperforming gold, Copernic increased his exposure to silver. His firm sees the opportunities in mining companies that are still shunned by the market. Many mining companies, particularly the ones who are not yet producing, are undervalued at current silver prices. Keep in mind that most of the silver mined is as a byproduct of other metals. And so you're going to be looking at copper, lead, zinc mines, and gold mines too. Without substantial investment in new mines, it's likely that demand outstrips supply, said McKenna. That would bode well for prices. And as Copernic likes to own companies like Pan American Silver and Wheaton Precious Metals, both of which have large mineral endowments and significant optionality to higher prices, and very well established with some of these other miners and exploration companies might be worth looking at too, although there's greater risk there for sure in some of those. But again, not a silver squeeze, but in this times like these, when it's down and we're seeing maybe some of these other, the COMEX looking long for silver, should give us some potential that maybe another movement like that, if maybe planned out and done in a much more realistic fashion, could have a greater and better effect than it did in 2021. Because think about it, the silver squeeze movement really piggybacked on the overall short squeeze movement with the AMC and the GameStop stocks. They try to do the same thing there. They're trying to repeat it, but it's completely different markets, completely different scenarios and situations. But nonetheless, silver certainly is closing the gap with gold, even with the prices down. And we'll see. No silver squeeze is happening right now, but we'll find out where things go in the future. Let me know what your thoughts are in the comment section below about things of this nature with silver prices. And stay tuned to the end, because there's some videos you should check out that'll be posted at the end of this video. A multitude of gratitude I extend to you all, and encourage you to please rate, share, comment, and subscribe.